Please, without further ado, help me welcome them to the stage.
Hi there, thank you so much for joining us. This is the State of Investment Management, where we're headed next. My name is Denita Tekova, I'm a reporter for Bloomberg News. We have an incredible panel today. We have so many different insights on advice delivery, product design, client demand. And of course, we have some of the biggest names in the industry here. We have JP Morgan Asset Management, we have Manulife, John Hancock, and we have BlackRock. There are so many things to talk about. So many things are changing in the investment industry. We're going to talk about alternatives, which were once only for institutions, and now potentially we'll soon be buying them from our phones even. We're going to talk about client preferences changing, longevity changing, retirement, and all those trends shaping the future. I want to start with Andrea Leisure, who is the head of America's client at JP Morgan Asset Management. She's overseeing 1.8 trillion of assets across North and Latin America. Andrea, in one sentence, what's the single biggest client need you're preparing for this year?
First of all, it's great to be here. Thank you for coming out to see us. I don't know if I can do it in 1 second because it probably is going to sound like the least sexy thing we're going to say on this stage, but I think the biggest need that clients have right now is diversification. Old, tried and true diversification. A 60-40 portfolio left unbalanced is now an 80-20, and the majority of that is in large cap growth, and there's $7 trillion of cash still sitting on the sidelines. So just huge opportunities to add value. 2025 has been like the year of revenge for diversification, with the international markets and the emerging markets outperforming the US by over 1,000 basis points thus far. And I just think there's a real lesson in that discipline, whether you outsource the money management or you do it yourself, of diversification. It works.
Yeah, this indeed has been the year of diversification. We can talk whether private assets fall into that and where exactly they do. But first, I want to introduce Christy Feinberg. She's the president and CEO of Manulife John Hancock. She's responsible for setting the strategic vision and leading all aspects of the retail business. Christy, what is the #1 client question you're getting right now?
Well, first of all, thank you for being here with us today and moderating, and thank you for my fellow panelists, and thank you to Futureproof for putting this event on. It's really a terrific event. I would say the #1 thing that we're still seeing and hearing from advisors is how do I grow my business and how do I meet the changing needs of the clients? And that's not a new question. I think that question is around for quite some time. I think what's changed is the answers to that, seeing the trends that we're seeing in the industry, shifting focus more to holistic planning, the impacts of AI in the industry, and things of the access to new vehicles as we're seeing private markets being able to be invested by a broader range of clients. So I think from that standpoint, the question hasn't changed, but the answers and how we address it definitely has.
I love that, and we're going to go into all the answers very soon. But I want to introduce Jamie Majera from BlackRock. She's leading the wealth advisory and retirement businesses. She drives adoption of BlackRock solutions and advances retirement initiatives. Jamie, what has changed the most for your clients this year?
Hi, everyone. It's great to be here. I love Futureproof Festival. This is my first. I think it's like where the leaders and movers and shakers of the industry are, so thanks for being here. Thank you for the view. What is the #1 change we are seeing from clients? I'm actually going to bridge the gap between these two, and it's really all about outsourcing. The number of advisors, the number of wealth management firms, massive organizations that are looking to work with fewer partners, and they're looking to work with partners who can take diversification and portfolio construction, but also power the growth of their businesses. And so outsourcing is no question the #1 request. We have 30,000 advisors currently developing custom solutions and model solutions with BlackRock today. That number will grow.
And do you think what's behind that is the need for simplicity, the need for scale, right, and helping clients get better outcomes while you're not having to spend all your time behind the desk picking stocks, bonds, alternatives, all of that?
Yeah, frees up your time. It's powering an advisory firm's growth and scale so that advisors can do what they do so well, which is serve clients, expand their services with clients, and help their clients grow.
And that said, the big topic is the great wealth transfer. You say the investor is changing. We see this It's about 84 trillion of wealth transfer by this year, and then 124 trillion by 2048. Well, Andrea, can you tell me how are you preparing for this? What does it look in actual solutions you're changing, like in long-term and short-term goals?
Yeah, so maybe a couple of ways to address the question of the great wealth transfer. I think first and foremost is education. And we developed the Guide to Retirement and the Guide to Alternatives, which I'm sure many of you know about, and the Guide to the Markets, different educational tools that allow advisors and institutional clients to understand the changing landscape and how to prepare for it. And one of my favorite statistics from the Guide to Retirement tracks the age that your end clients might be and the percentage chance of them living to 90 or above. And today, if you have a 65-year-old couple that are in good health and they're not smokers, 65-year-old couple, there's north of a 73% chance that one of those two people is going to live beyond 90. And by the way, sorry guys, but women outlive men, and 70% of women change their financial advisor once their spouse passes away. So I come back to this point about education because educating the whole family is so important. Spending time on that engagement and education of the whole family. You also see many of your firms are changing their staffing models to ensure more teaming, more generational planning inside the advisor community, because those trends are similar inside the advisor community in terms of upcoming impending retirements and ensuring that the practice is also being left and being handed. So one is education, and then two is the evolution of investment solutions. Like the number one thing on retirees' minds is security. They've worked so hard to save, and once they've worked all that hard to save, it's how do they maximize what they've saved through really prudent investments and also through really prudent tax management to make sure they keep the most of what they've invested. So a lot of the investments that we've made internally in terms of building out, whether it be model portfolios, whether it be active ETFs, whether it be in-plan, spend-down, eligibility and portfolio solutions in our target date funds, if you want to do that in plan, it's all to enable greater security and optimization in retirement. So I think it's a combination of the evolution of the investment solution, but also the really important evolution of education. And I'm sure everyone here is already talking to their clients about this and educating their clients, because if you're not, somebody else is, because they're hoping they're getting that phone call when that huge transfer happens, and holding on to that wealth is going to be so important.
I just want to add on to that because I 100% agree with you. Probably one of the biggest needs is around education. There's a lot of change that's happening, and it's across multiple generations. I think one of the things that we've been very focused on is ensuring that we're helping bridge that gap. And if you think about it, the one area that we have spent some time on building out is empowering business owners. A really, really interesting statistic is that 84% of our private owners today, private business owners, are either Gen Xers or Boomers. They are going to look to liquidate, or they're going to look to sell their businesses within the next 10 to 20 years, and yet only 5%, 74% are looking to liquidate. Only 5% have a written plan on how they're going to go about doing that. And we talk about the great wealth transfer. I mean, that's a significant amount of money in motion just in that alone. And we have a tremendous amount of people out there that aren't preparing necessarily in the way that they can to be able to protect that wealth for the multi-generation. And the idea, I mean, it's a huge opportunity for us as an industry to get in front of that. But the idea that we're going to see all those transactions happening within the next 10 to 20 years, that needs to have some strong planning around it. Otherwise, there's a real cost to missteps in that.
There's so many things to pick up on this. So small business owners, retirement security, longevity, next-gen investors. So how many people here are under 44 years old? All right. So you are all the next gen. Next-gen investors, you are millennials, you are Gen Z. Those who are under 44 years old, that is 44% of the global population, will be the primary benefactors of the intergenerational wealth transfer. And when you think about how you're building your teams and you think about how you're getting to those next-gen investors, what's important to next-gen investors? One, they love technology. They get all of their advice from social media, and they want content. They want to understand what the new things are. Why do you think that 80% of next-gen millennials would rather invest in Bitcoin than stocks and bonds? Because they want new, they want technology, they want digital. This is why when advisors came to BlackRock and said, how do we actually engage with this next generation of investors, we developed IBIT, which is a ETF, a Bitcoin spot ETP, and it is the fastest growing ETF in the industry because next gen investors are investing in it. It's not small dollars, right? These are millionaires. So that's a big piece of it. The small business owner is fascinating. So all of you high net worth clients probably have high net worth clients. They are small business owners. Those same small business owners are trying to build their businesses, let alone plan for the succession. And in building their businesses, they need to offer 401k plans, retirement savings plans to their employees. Who's helping them do that? Advisors. 72% of small business owners do not have a retirement plan for their employees. So if you want to win that liquidity event and turn that small business owner where you have that personal wealth into a $100 million prospect, you better be building yourselves as their business partner, helping them build retirement plans for their businesses. So there's so many connection points here, and you mentioned longevity as well. Let's talk about private assets and the role of private markets in portfolios to help people fuel those longer lives. Incredible opportunity there.
I really like the point about Gen Z. And, you know, this is a generation that takes their advice from social media, from influencers, a generation that buy crypto, a generation that buys very different stocks and bonds than anyone else. How do you talk to that generation? How do you address, and also to what extent they actually want to be connected with an advisor? Isn't that a generation that wants to do self-directed investments in the first place?
So I think sometimes we get caught up in talking about client segments as monoliths, right? So like, what do Gen Z and millennials want? They're all different, but there are many who actually, as I mentioned, they do prefer digital, they do prefer technology. That does not mean that's the only way they want to access advice or access investing. In fact, so many investors, clients who have a self-directed account also have a financial advisor. And so the question is, if you're the financial advisor, how are you going to win more of that wallet, right? How are you going to understand what your client, who might be a millennial or a Gen Z and is trading on some platform, how do you understand and show the value you can bring over looking over their entire portfolio and looking more holistically over what they're offering? Again, you know, it's a reason why we start to see now digital assets playing in the ETF space. It's so that advisors can actually more holistically manage those portfolios, still have the exposure to digital, but put it in a much more risk-managed financial plan.
Maybe if I could just add to that, and maybe this comes back to my like not sexy first answer around diversification. Irrespective of your age, number one, the most important thing you're going to get your clients to do is save, right? Like that is the most important thing, is understanding what you need for income replacement later in life, which is easier to comprehend at 44, harder to comprehend at 24. But the earlier we all can start building and ingraining, which is one of the reasons college savings is also such a great tool. 529 plans, because you're teaching the younger generation, when they're having kids, most of them are in their 20s, early 30s, about savings, or when they're opening that first 401k plan as an employee the first time. You know, that role, the ability to be there and educating, because if you put away 2% versus 8%, you know, the difference in what that is compounded over time, and then how it's invested over time, it's, you know, it's what this group knows. So I'm going to come back to, I agree with you that there are places for some of these additional kind of add-on things, like some of the more esoteric asset classes, but I think the most important thing like isn't going to be the hot fad. It's going to be more of like getting people to save, getting people into invest. I love your point about the DC plans, because you're absolutely right. More and more states are mandating that small businesses have a plan, and you see more and more advisory practices merging wealth and retirement because they see the ability to add significant value to participants in that plan and to the business owner and then to be that first call when either that liquidity event happens or someone is just rolling out of the plan. And as we know, in particular, the next generation, I'm older than 44, so I'm going to say the generation behind me does change jobs more frequently. And when they do that and they're looking to roll over, maybe they'll go self-directed, but if they're looking for financial advice, who are they going to go to? Probably the advisor that's been looking after them while they're in that plan, in particular when it's the majority of their assets and they're still younger.
Yeah, and I'll just add on to that because I completely agree. It's not that their needs are going to change. It's that how they interact and how they connect and how we interact with them, that's what's going to be different. At the end of the day, although many of them, I have 3 boys around that age, think they know it all, at the end of the day, they're still going to need somebody to help educate them as they continue to grow their wealth. So it's really more about understanding what their needs are, understanding how they want to interact, understanding what's important to them, and then how do you draw them in for that conversation? How do you start building that relationship early on so that as they start to recognize the fact that they need help or that they have a need to have advice in a more robust way, that they're reaching out to you.
And what do you think is the most underserved need at the moment? Like if you can give one tangible thing that you think is the most underserved, where do you start, Jamie?
The most underserved need, well, I think it depends often in kind of the space of the market and the client segment we're thinking about. But I think I'll go back to what you were saying, Andrea. The most underserved need is just getting people to start saving and investing and doing it in the right way. I think back to when I was growing up. My dad did such an excellent job always getting me to just think about saving a little bit of my paycheck. I now try to get my 4-year-old who told me over the weekend, Mom, I'm a kid, I don't have any money. Well, he does. He has a piggy bank, and I diversify his savings by giving him quarters and pennies and nickels and dimes. And that's his way about thinking about saving. But I think the underserved need is the next group of people who are coming into the market and don't know the importance of saving. Saving first and then invest. The second area that I would say is quite underserved, and let's talk about it. When we see the future growth, actually today's potential of women as controlling 50% of the global wealth market, if you are not attracting women, if you are not engaging with the spouses of maybe your male clients, if you are not talking to their children, you are missing out on a massive growth opportunity. This is about commercial opportunity. And women are controlling so much more wealth today than ever before. And they have different needs, right? Women want to have personalized solutions. You talked about women leaving their advisor or their husband's advisor. In the first year, 70% leave their husband's financial advisor in the first year. Do you know that women are more likely to want advice? Only 50% of women actually are served by financial advisors. And when women are served by financial advisors, their confidence goes from 50% to 70%. By the way, you're looking at 3 women up here who probably make a decent amount of money, and we have incredible financial advisors. And so I think that commercial opportunity for advisors is just one of utmost importance for the future of your business, 2, a very underserved area of the market.
I would agree with that. And the reality of it is as well, is it's not just about women inheriting when their spouse passes away. It's that they are also wealth creators, right? They are creating wealth more today than ever before. That's not going to stop. That's going to continue to grow. And from my perspective, the most underserved need in the market is going to go back to, and it's keying on all these things, it's education. You don't know what you don't know. And if you don't understand what the impact is to start saving early, if you don't understand what the impact is on some of the decisions that you make, there's no way for you to be able to solve for your long-term goals. And as we're living longer, we need to start saving. We need to start diversifying. And those aren't always easy concepts. I mean, there is a real issue with financial literacy. And especially in terms of when kids are younger and in high school, I don't think we do a good enough job starting that education out early and often.
Andrea, we're talking about the Great Wealth Transfer. We cannot talk about taxes. How important are taxes right now? Is that the number one thing clients come to you? How do you see it in terms of different products and kind of the best wrappers potentially for clients?
So clearly taxes are really important. And more, the advisors that we serve are coming to us looking for solutions for taxes in different ways. They're looking for tax solutions at the individual solution level, where we were one of the first active ETF managers. A big part of that success is the liquidity, transparency, and tax efficiency of the wrapper when you put it around outstanding active management and what you're able to do with that. Similarly, we bought a company called 55IP 5.5 years ago that does tax management and tax transition for overall portfolios. You can do it at the direct indexing level on SMAs, et cetera, and you also can do it across the overall portfolio. So without question, it is a huge need for clients. I think you have to balance the need and desire for tax advantaged, tax efficient portfolios with simplicity. And I do think this kind of comes back to the point Jamie was making earlier. We are firm believers in model portfolios, in outsourcing parts of portfolios, even if the advisor is doing underlying manager selection and building custom portfolios, but the ability to simplify the tax reporting. The term tax alpha was coined within the last decade. I had not heard of it before. We hear about it all the time. They'll say, show me the tax alpha. Am I generating $50,000 of tax alpha during super volatile periods? I want to be able to print that out on my statement super easily and show it to a client. It's another alpha stream, and it's really, really important. So I know all of us are doing a lot of really innovative work on this front, but absolutely, the taxes are here to stay, and it provides a tremendous way for advisors and asset managers to, in partnership, add value through tax management, tax smart investing.
It's the number one question we get asked by advisors. And to your point, there are certain clients who you want tax efficient exposures like ETFs, and there are certain clients, higher net worth clients, where you want real after-tax returns, after-tax management, tax alpha, as you say. It is one of the fastest growing areas of the market. Direct indexing might be a term that you're all very familiar with. About 3 years ago, BlackRock acquired a company called Aperio. And the reason we acquired this company was because we saw the demand that was being created, and more so the value that was being created by building custom SMAs. Now, direct indexing can be taxes, right? It can also be values and beliefs. So circling back to next generation investors, circling back to ultra high net worth. My mic? All right. There we go. I'm back. Circling back to all of that, direct indexing is an area where we are spending a lot of time. And it's actually this kind of smashing together of two massive trends. One is in every sector we live in. So step out of finance for a second. Every other way we consume product, what do we want? We want personalized solutions. We want it custom designed for me. I want custom made jewelry. I want a custom, I don't know what else. I like a lot of custom stuff. However, in direct indexing, that's what it's doing, right? So it's this need for customization and this rise of high net worth investors, right? High net worth investors, households over 5 million in assets, over 50% of US wealth. 50% of US wealth, and that number is getting larger and larger. And if you're going to win with that segment, you do need to have differentiated, unique solutions like direct indexing, like option overlays, Spider Rock. We're bringing so many capabilities to this space because it's such a growing area.
And Christy, I want you to follow up on that because we talked about taxes, we're going to talk about technology, and we're going to talk about personalization. I feel as though these are two hot terms that go together. What does really personalization mean? Like, is it only taxes? Is it the different wrappers? How do you deliver it to your clients, and what exactly they're asking for?
No, I mean, listen, it's a great question and a topic that we talk about all the time. Personalization, by the way, means something different to absolutely everybody. I went around and asked 5 different people, what does customization mean? You're going to get 5 custom answers. But the reality of it is that personalization is about bringing what the client is interested in, solving the client's need, knowing that there's not a one size that fits all, but rather that every single one of us has unique needs that we need to meet. The fact that technology is getting to a place, because it kind of ties it all together, technology is coming to a place now that we're able to provide that personalization. And it's not just personalization at the portfolio level, which is great. We can make custom portfolios and be able to deliver that in a more efficient way. It's personalization at the content level. It's personalization to be able to reach out and provide the education that is of interest to that individual. there's also a huge part that we don't talk about, and it's personalization even within our own practices, and allowing us to make things a lot easier, allowing us to be able to focus on the things that will really matter and that will really drive value. We're constantly bombarded by so many things. Every single one of us gets far too many emails. So be able to get to a place where the majority of what's coming at you is actually tailored to what is of interest to you will be extremely powerful.
And Andrea, what's your take on that?
I agree with a lot of what Christy said. I think the one place where to me, there is still a question mark is, personalization can mean vastly different things when it comes to investing. But if you look at long-term track records, it is very, very, very difficult to beat the markets. And if every individual could just do that by doing their own thing, like, you wouldn't need firms like ours who spend hundreds of millions of dollars on research and traders and risk managers and like generating alpha. So I think the jury is out on, like, depending on how far, it's one thing if someone's like, I want to build a values-based portfolio and I'm willing to make these trade-offs, or I own way too much JP Morgan stock, so I want you to build me a custom index that removes my company. That's not what I'm talking about. Right. I'm talking about the notion that, like, personalization gone too far, I think erodes the value that, like, really great active management with really great risk management wrapped around it. Because let's be honest, like, really great risk management is active management. It's at the core of it. That's very, very hard to do at the individual personalized level. And I think long-term returns have shown that and will continue to show it. So I think it's kind of at the margin. It's like the art and the science. And I think it's a really careful balance.
Well, I agree. I think it comes back to the segment, the client segment. So for, let's call it 80% of investors out there, a strategic asset allocation, long-term asset allocation that is diversified across equities and fixed income is the path to success, or the path to growing and getting on the right retirement readiness or whatever your goal is. But there is a segment, which is that high net worth investor, someone who has deep beliefs, where they want to align the S&P 500, but they want to customize that for maybe taking out securities that don't necessarily align with their beliefs. And then back to the point on taxes. Tax management, direct indexing is not for everyone, right? It is for high net worth investors who actually have enough capital gains to actually benefit from it. And so I worry that we do get a little over customized, over personalized, and over direct indexed when actually a portfolio of ETFs across equities and fixed income with a strategic asset allocation is a very fine solution.
Christy, what is your take on that? And I also wonder if you want to grow that specific field, like, what teams are you hiring? What teams are you growing?
So I don't disagree with what they were just saying. It's finding that balance. I do think there is a real need for personalization within portfolios. That's what we do today. We create plans that are personalized. To be able to do that in a way that brings in technology to make it more efficient, to make it more effective, is, I think, where you're going to see the real power. 100% agree that there is active management, that there's risk management, all that comes into play, and that over customization could be an issue. But when you think about it from the standpoint of having the ability to free up our time to be able to deliver those tailored solutions, and it may not be down to the individual stock, but everybody's portfolio looks a little bit different, and to be able to do that in a more dynamic way is, I think, will be of huge benefit. In terms of if you think about it from a resourcing perspective, listen, our people, we talk about this quite a bit. We talk a lot about advisor engagement. We talk a tremendous amount about employee engagement. Our people are our largest asset. I think everyone would agree on that. And one of the things that we're very focused on is ensuring that as these changes, as these needs and expectations are changing, and as technology is coming more and more to the forefront, that we're continuing to upskill our own employee base, and that we're also looking to attract, a fresh perspective that will come in and challenge the way that we do things. So as we think about all the changes that are going on, one of the things that we focus a lot about is just learning and development, and ensuring that we're really investing in our own employee base. And so a couple of years ago, we came out with what we call Fuel Up Friday. It's one day a month. It's probably not enough, but it certainly is one day a month where we are focused 100% on just training. And that can be an individual personal development, or that could be something that's led by the organization that are more broad skills that need to be brought to the forefront of how people are working together. But ensuring that we're continuing to stay in front of it, ensuring that the employee base stays energized and stay in front of it. And then, of course, bringing in the constant new perspective or fresh perspective. It's a talent war, and especially now with a lot of stuff that's going on within technology. It's not just our industries, across industries. So these skills are in extremely high demand, and I think it's not just about attracting them; it's about retaining them.
Jamie, what's your take on this? What is the hardest roles to hire, and how are you growing this team in particular?
So I come at this from maybe a different perspective because I had a very non-traditional background. So I was a liberal arts major, psychology. I couldn't decide whether or not I wanted to go into criminal psychology or the music industry. True story. I went towards the music industry and then made a fast pivot into finance. Why? Good question. Because I needed to pay off my student loans. But the real thing that happened there was I was actually going after this disruption. So when I was coming into the financial services industry, it was at a time, who remembers Napster? None of you, because you're all under 44. Okay, we got a few of you out there. Napster was basically disrupting the music industry. Music was going digital, and I found that fascinating. And so for me, I came into finance because I saw if technology could do that in music, what would happen with any other industry? And so I came here. I've been at BlackRock for 24 years, and I've had many, many different roles. What I think about when I'm building teams and when I'm hiring, and even for my own personal development, I'm super curious. I'm a curious person. I ask a lot of questions. My teams sometimes get annoyed because I ask so many questions, but it's because I want to understand, and I want to understand the thought process. I just finished a book, great book. It's called A More Beautiful Question. By Warren Berger, and it's all about how questioning actually drives innovation. Any innovation out there, there's three questions. Why, or what if the world had this? Why doesn't the world have this? And how could the world have this? And when you think about that, that's what I look for in teams. I want people that are asking these questions. I want people that are going to think about how they do things differently, and I want people from very different backgrounds, not financial people, but people who see the world in a much broader way.
Andrea, we're moving to diversification, but a slightly different one. Diversification of private assets. Obviously, now there is a lot of talk of private assets going into 401ks. It was once only an institutional access to, and now it's a retail tool. What's your take on where private assets fit within a 60-40 portfolio, and for a retail investor that's maybe a high net worth investor?
Yeah, so I'm sure at every session that anyone here has attended, private assets have come up in the conversation. Without a doubt, it is the topic du jour. Private assets have served institutional clients extremely well for decades. We've actually been managing private assets. We've been managing private real estate in our collective trust for our target date funds for over 20 years. So even though some of these concepts are like front and center in the media right now, they've been around for a long time. I think what is newer is over the last 10 years, the democratization, the wrappers, not dissimilar to how active management in the public markets is now being wrapped by an ETF. That wasn't something that was available in the market 10 years ago per se, and now it's ubiquitous. Similarly, there are a lot of private investments that are being wrapped in much more liquid types of vehicles. And so, look, over time, I think a lot of these products are going to be tested. So I would say, bottom line, we think there could be a place. There is never, you never paint anything with one brush, because everyone's clients look differently, have different risk tolerance, have different liquidity needs. And I think that is a really important consideration. Most of the products that are in the market today have been created during a bull market and have not been tested. And I think that risk management and really understanding the liquidity constraints in a severe risk-off environment is just one that has to really be very well thought through. JP Morgan Asset Management has created capabilities. We have We have a private REIT, we have a tender offer private equity fund that has a big weighting in secondaries, our infrastructure investment fund, which is one of the largest in the industry for institutions, has been available to RIAs and wealth managers now for a decade through feeder funds. But as with every product we brought out, we've been very deliberate and very careful and very discerning. I don't think you'll see us have 30 of these capabilities in the marketplace. And I think in particular, as you get down to the smaller investor, like the really small investor, I just think that the need for education here is paramount, and really understanding what you own. And coming back to a point Jamie made, the model portfolio, the outsourced portfolio that's professionally managed, where a manager, I mean, maybe there'll be a time where there's 10% in, generic wealth, or 15% that are in private assets, but just managing that liquidity, you just need to be really careful, because I have yet to see any of these capabilities that have true, like, daily liquidity, and especially that have been tested. And so we just have to be really careful. We are in an industry whose reputation and trust is at, like, the center. And losing that, you might as well close up, right? It'll take you decades if you're lucky to get back. So I just think you want to be careful. You want to be measured. You want to be careful. There could be great upside, but you just want to make sure you're doing it the right way, and you're really doing your due diligence.
I think that's part of the reason that both of you now have mentioned the word education so many times, right? And there is an education factor there. Even, words thrown around like private markets, alternative investments. Actually, the umbrella is quite broad, right? Alternative investments, you can have fully liquid mutual funds, fully liquid alternative investment, liquid alts. You can have private markets. You could have alternative assets like crypto and other things. And so I do think we tend to throw around and oftentimes conflate a lot of these words. I will say that when we look across the industry, and I think any of you could pick a number, but the average allocation to a retail portfolio today is probably around 4%. So actually, that's not nothing. But it's certainly not the 15, 20, 30% that institutions have been managing for decades. By the way, maybe it should not be that large, but when you look at large wealth management firms, maybe some of your firms actually have CIOs that are calling for a more significant allocation to private markets, because if you're going to invest in the full power of the capital markets, you need public, you also need private, right? Private is where the growth is coming from, but to your point, it needs to be done in the right way. And it needs to be professionally managed, and it needs to be risk managed. And you need to think about many considerations: liquidity, fees, risk profile, diversification profile. There's so much there, which is why we believe in doing it through a whole portfolio. Right, so our job as a fiduciary to all of the assets that we manage on behalf of all of you and our clients is to build portfolios that incorporate public and private, all underpinned by risk management, and delivered through the most efficient wrappers, the most liquid wrappers, and in a way where advisors can actually understand the value of public and private together and then talk to their clients about that. We do that through the wealth market. We've actually just gone to market. I think there was a breakthrough session at our booth earlier with GeoWealth and iCapital, where we've built models that can be customized to incorporate private and public markets. And we've also announced doing the same in DC plans, in retirement plans. And in fact, we just had our research come out today. Read on Retirement. It's possibly like yours, right? Guide to Markets or Guide to Retirement. We have something called Read on Retirement. We've been doing it for 10 years, where we track the sentiment and the behaviors and the actions of plan sponsors and savers and retirees. And private markets came back as a top area of interest. Now, interest to be considered very thoughtfully. Right, so you have the executive order coming out. That is a call to be thoughtful about how we're doing this. And 1 in 4 plan sponsors said they want to start thinking about incorporating private markets. Because again, you raised it. Longevity, if people are living to 90 and 100, public markets is not going to get there alone. And so you need private assets, but done in the right way, strategically, through a glide path, through a target date fund. And we actually brought that to market with Great Gray a few months ago, and we're looking to build LifePath, which is a target date fund by BlackRock. We're looking to build a private markets version as well.
Christy, what is your take on this? We talked about liquid vehicles, more liquid vehicles. What is the retail investor that should have private assets in their portfolio? And what is the retail investor that simply doesn't need them?
Well, again, I think that it all depends upon the individual needs, and that's a sort of a difficult segment to or call out. With that said, I think that depending upon your length of time that you're going to be in market, and depending upon what your own portfolio looks like, I do believe that from a retail perspective, that there is a role that private markets plays within the portfolio. And it's not just that it's, that we have access to it now, but it is the fact that we're living longer. And, and Jamie made the point. You think about it from a public-private perspective, public markets are probably not going to get the retail investor that's younger in life where they need to go. At Manulife, we've been investing in private markets for over 100 years. In fact, we're one of the largest natural capital owners out there. And so we think about this day in and day out and think very thoughtfully, because just because education is just as important as innovation. And right now we're in a space where we're bringing private markets to a part of the market that it hasn't been in the past. And while that's great, the amount of education that needs to be behind that to ensure that we're making good decisions, to ensure that the end client really truly understands what they're getting in. And the average retail investor probably doesn't have that much knowledge around private markets. So that's going to be on us as an industry to really truly educate and guide through that transition.
And I feel as though private assets is that big thing people were predicting for a long time hitting retail. But everyone here is looking for the next big thing, and you have experience from three big firms. And I want to hear each of you, your big, bold prediction, news headline worthy, for the next 5 years. Maybe, Andrea, we can start with you. Big, bold prediction in like 1 minute.
Well, I think I've mentioned active ETFs a few times, so I'm going to go on that theme. I think within the next 5 years, active ETFs will make up more than 50%, maybe even 60% of industry ETF flows. I think the main thing that's going to fuel that is not just the growth in public equities, but the growth in fixed income, where if you're buying the index in fixed income, you're missing in the US, you're missing half of the market. And so the ability to help move those $7 trillion out of cash and reallocate portfolios, I think active fixed income ETFs are going to be a major beneficiary, and I think we're going to start to really see that. Also, Jamie mentioned model portfolios. I think ETFs as a component and really smart fulfillment, to her point earlier on, I just think we're going to start to see it, like it's already taken off. It's going to see it be the majority of flows within 5 years.
Okay, active ETF, model portfolios. Jamie, what's your take?
So I agree with you on yours. I think my big, bold prediction is that half of the wealth market, meaning advisory practices, wealth management firms, assets under management, half of that market will be delivered through custom portfolio solutions. And what I mean by that is today we have 30,000 advisors coming to BlackRock asking us to help customize their IP, their strategic asset allocation, and help deliver it to them so that we can power and growth their business. My bold prediction is that 30,000 will turn into 100,000 through BlackRock and through my great partners here on stage.
Christy, what is your take? In 1 minute, one big, bold prediction in the next 5 years.
Okay, I'm going to go way out there. We talked a lot about AI. We did not talk about blockchain or tokenization.
Oh, okay, we're taking it crypto.
I believe that the next transformation that will likely happen within the next 5 years is that tokenized assets will likely be mainstream within that time. It's going to free up more access. It's going to create more diversification in the marketplace. It's going to create more transparency. And so my big, bold prediction is in 5 years, we'll be up here talking about tokenization.
I love that. We had three totally different trends. We have active ETFs, we had model portfolios, we had tokenization, and we had customization. So we had so many different things. Incredible panel with so many insights. I want you to thank Andrea, Christy, and Jamie. Thank you all for attending this great session, and have a lovely day.